Up next, we take a look at how markets reacted to central bank decisions and other economic data through the week. Wall Street faced sharp declines on Friday. The S&P 500 index fell around 2%, while the NASDAQ composite entering corrected territory. The Dow Jones also lost as investors reacted to a weaker than expected July U.S. jobs report, with non-farm payrolls rising only 114,000 and unemployment edging up to 4.3%. European stocks also dropped. The Stoxx 600 fell 2.82%, marking its worst day since December 2022. Tech stocks led the losses, with major companies like Intel experiencing steep declines. Financial services were down 5.22%. Asia-Pacific markets saw heavy losses as well. Japan's Nikkei 225 tumbled 5.81%, its worst day since March 2020. The Topex fell 6.14%. Major Japanese companies, including Daiwa Securities, saw major market cap reductions. The sell-off was driven by concerns about a potential recession spurred by weak economic data and central bank actions. The U.S. Fed Reserve held rates steady, while the Bank of England cut its key rate for the first time since 2020. Well, in the commodities market, crude oil prices dropped nearly 3%, with U.S. oil settling below $75 a barrel. Weak economic data and falling manufacturing activity in China also dampened the demand outlook. Gold gained around 2% this week as risk of sentiment prevailed in the markets. And with that, it's a wrap on our markets segment for today. For more on this, we're now being joined by Anand K. Rathi from Bengaluru. Welcome to World Business Watch, Mr. Rathi.
Thank you. Good morning.
Good morning. I want to first start by asking that why are markets facing selling pressure at the moment?
So Indian markets and the global markets were looking at Fed for what kind of signals that they're going to give. Last time around, they did mention that they may cut the interest rates. But then the U.S. jobless claim increased, and this suddenly spooked the market, saying, is Fed a little late in cutting down the interest rates, thereby pushing the economy itself into recession? And this is one of the reasons why the markets really started cracking in the last week or so. Plus, if you see, the tech giants have not been reporting earnings as per expectation. So this led to global sell-off. And the other reason which people have not given enough attention to is Bank of Japan hiking its interest rates for the first time for after a long period of time. This could well mean the end of yen carry trade, which could actually spook the market, which could mean money moving away from dollars into yen. And these are the three main reasons why the global markets really had a big correction last week around.
Right, Mr. Rathi, do you also expect market fluctuations to continue until the U.S. begins its rate cuts? What's your assessment on that?
Not just U.S. I think, generally the global markets, of course, looks at U.S. for any kind of indication on where the market should go. So, yes, they will look at Fed's stance on, are they going to accelerate the journey towards Fed cutting down the interest rates very soon, expecting, or at least trying to avoid recession if at all there is one. But I think they will also look at the macro numbers that the Fed will come out with, or U.S. markets will come out with, especially on the manufacturing and the service side. Plus, they will also keep a close track on China, because if China slows down, which really looks like, this could well mean demand going down for a lot of U.S. and the global companies. So these are the three main reasons why markets will be, or the reasons why markets will look a little volatile, especially on the global front.
Right, we did speak about how the market looks on the global front. My last question to Mr. Rathi, what is your outlook on the Indian markets in the short to medium term?
Okay, Indian markets, I think, are going to be determined by three major factors, especially on the domestic side. In the medium term, we do expect state elections to kick in anytime. And this could mean that the market will look out for what kind of results the elections will throw out, and this could be some indication on the stability and the volatility of the central government. So they will be keenly watching out for the state elections and their results. The other thing that they are looking forward to, because Indian markets have been on a roll for some time now, there are no major triggers. Last time around, there was election results on the central side. Now there was budget, but what more, right? Indian market will definitely look for earnings. Is there earnings upgrade that many of these listed companies are going to come out with, which I think is lacking at the moment. So that could mean the medium term can look a little not so great like what we have seen in the last few quarters. And the third is the escalating tension between Iran and Israel, right? So this could well mean the crude oil prices could go up, and that is bad news for an importer like India. So these are three main reasons why Indian market in the short to medium term can be a lot more volatile. But I think the inclination will still be towards upside is what my stronger belief is.
Right. Thank you, Mr. Rathi, for joining us on the show with your insights.